Massmart's first half headline earnings per share climbed almost 14% to 416 cents as the group benefited from a weaker rand. The group also declared an interim dividend of 252 cents. Joining me now in studio to unpack these figures is the CEO of Massmart, Pattison. Thank you, sir, for joining us. Great to have you on the program.
Pleasure.
So let's just start off with the fact that weaker local currency has actually assisted you over the period. So just really proving that the strong rand scenario has not been working in your favour.
Yes, when the rand is strong, our African businesses come under a bit of pressure. The products mostly come through South Africa, so they're expensive in those local markets, so we don't do that well. As the rand weakens, the business improves in those non-South African markets, and also we get a kicker from the translation profit, it's called.
Are you concerned about the rand scenario as it stands right now, given the fact that we are expecting to see a much stronger local currency going forward? At what level would you say it's becoming dangerous for Massmart?
We quite enjoyed the move from around the 6.8 to the 8. I thought 8 felt quite comfortable. It's pulled back a bit to about 770, I think, at the moment. That seems to be all right. Mostly what we don't like is it moving around too much. You know, from 680 to 8 is a large movement. It causes a shock through the supply chain.
Absolutely. Okay, so let's just touch on the internal inflation side of things. Sitting at 1.1%, it's actually the first time that we've seen inflation coming through since 2009. The largest chunk out of the overall inflation scenario is actually on the food inflation front, which is sitting at 2% at the stage for Massmart. Give us an indication of what is actually happening on the inflation scenario. We had inflation figures out today sitting at 6.3% year on year. Different picture from what the retailers are showing us.
Yes, so Massmart's product categories we're in, being food and hard goods, makes up perhaps about 20% of the CPI basket. So what you can read into that is if our inflation is at 1.1%, the rest of the CPI basket is at much higher levels. So what we're seeing is the slowdown in the global economy driven by the developing markets have caused the manufacturing countries to drop their prices, and South African consumers in hard goods are benefiting from that. And in fact, hard goods are probably going backwards, down by 5%. Food is mostly a local business, so local inflation dynamics inside South Africa are causing food inflation probably to be above the 1.1%.
At what level would you actually like to see inflation? Within the target band of 3 to 6%? Is that where you'd be comfortable?
Correct. We would like, first of all, some consistency and predictability to inflation. We mostly want our product inflation and CPI to be about the same, and somewhere between 3 and 6%.
Dion Wyatt, however, is still experiencing deflation. When do you expect this to change, if at all?
Well, Dion Wyatt's an unusual case. You know, it mostly sells laptops, computers and televisions and hi-fi systems. Now, that entire category is undergoing revolutions in technology. So I think we can expect that thing to be in deflation for several years to come.
Let's touch on Cambridge Food. Is it operating and performing as you expected?
Certainly on the top line it is. We've made great progress. We're up at about 42 stores now. We've reached our 5 billion rand target. We've now got critical mass in KwaZulu-Natal and Gauteng. It's now time to pause a bit, make sure the supply chain is working properly, get our management team and processes and systems in place, and then we'll start expanding to 10 billion.
So you are gaining market share essentially?
Well, we were 0 3 years ago, and we're now 5 billion, and that's about 2 or 3 percentage points market share.
Who would you say at this point is actually your biggest competitor?
I think we are probably still trading primarily against the independent retailer, remembering we're mostly around the taxi ranks and bus stations and train stations. However, we of course come into contact with some formats of Spar, Boxer and ShopRite.
We know that Massbuild is performing quite well in Botswana. You've opened up your first store in Gaborone. What kind of expansion are you expecting further into the African continent? Are you planning to move in aggressively, or are you going to do it at a similar pace in which you've been doing over the past while?
Probably similar pace. We call it a city strategy. So we're going to expand Builders Warehouse into all major cities in Southern Africa. The obvious exception at the moment being in Zimbabwe, where we've decided not to invest.
Let's move on further to Mass Cash. 80 wholesale stores, 28 retail stores that are coming through. We did see trading profits before tax actually decreasing by 22%.
Correct.
Are you expecting this to change going forward?
I think it's probably going to continue for the next 6 months. What we've done in that company is we want to run a national brand for both SaveRite and Cambridge, and that means we've had to invest in a national team before we've got a national footprint. So it's costs running ahead of sales growth driven by investment.
And overall, in fact, we saw cost pressures coming through as well. That increased by almost 15%, 14.5%. In fact, obviously, there's quite a big transition to start implementing and integrating Walmart as well. What kind of cost pressures are you foreseeing into 2012?
So I think there's two cost pressures we're feeling. Remembering though that still costs grew slower than sales, which is always a good thing. Yeah. So we're pleased with that. But the two cost pressures are fundamentally investing, as I've talked about, into the food retail business right across the group. And the second is as we moved from less acquisitive growth to more organic growth. And what that happens is your rents tend to be higher and your depreciations tend to be higher of new stores. So we've essentially increased the number of new stores we've got, and they run at slightly higher costs than the average. And I think that's the underlying cause.
And I know that, of course, labour and electricity also being a bit of a hindrance for you. Labour perhaps being one of the sore points as well. How do you plan to manage this year?
Well, you know, we sort of understand the underlying need for above inflation wage growth to the lower income groups. I think we understand that. Yeah. What we need to pay for that is productivity gains over and above that. So while the South African economy is growing at above a real 3% GDP, we are able to afford these wage increases. As soon as the economy grows slower than that, we aren't, and we'll either have to get lower wage settlements or we'll have to start managing our costs better.
I think the market is also very curious as to how you are starting to deal with your product line relative to what Walmart is doing. Are you looking at specific suppliers? Are you looking at specific products to ensure that you do offer the best value and quality for the consumer? Have you already started to integrate the Walmart products into your offering?
Well, most importantly, we're integrating the Walmart processes. So Walmart have a very sophisticated supplier review process. We've learned from that, borrowed it, got the documents. Some of our suppliers already know it because they supply Walmart elsewhere in the world. And we're one by one going through each supplier, benchmarking against the worldwide deals available. But interesting, what we've learned is that Massmart buys the product from fundamentally the same companies that Walmart buys from. So I don't think we're going to see a dramatic shift in our supply base, even though we may negotiate lower commissions to import the product where it's imported or negotiate better deals where it's locally manufactured.
Grant, it also seems that a lot of the retailers, I know prior to Walmart, Massmart teaming up together, there was a lot of worry and panic that market share would be taken and also the local suppliers would actually be affected. It seems that this panic has somewhat dissipated. Can we still expect a very strong thrust coming through from Massmart going forward?
Look, I think there was a lot of hype generated during the tribunal, and the interveners in the competition process needed to hype it up a bit. I think the reality on the ground is suppliers are going to be affected, but positively, and I think they're becoming excited about that. And then perhaps some of the competitors are needing to respond quickly, but fundamentally South Africa's retail space is in very good shape and is globally competitive, and we're not going to have an easy time by any means.
Fantastic. Thank you so much, Grant. Great to have you on the program. Much appreciated.